Let's also now connect with Mr. Pradip Shah, Chairman of Indasia Advisors. Pradip, good morning. Thank you for joining us. Pradip, crude prices have reversed. Are you getting a sense that there could be a near-term top in crude, and do you think somewhere the macros have bottomed out and the worst of the newsprint, both in terms of interest rates and crude, is behind us?
Well, no one can predict how crude prices will go, but it looks as if supply will increase, because at $76 a barrel, I think there's a lot of additional capacity that can come on stream quite quickly. But I don't think the worst is behind us. Don't forget, the US is doing extremely well as an economy. And there, while the Fed announced last week that the pace of interest rate rises will be a little slower than what the market was anticipating, it's still going to rise. And that, coupled with the US economy doing well, is attracting money into the United States. We've seen in our own markets money flow out from FII holdings back abroad from in February, in April, in May, and overall up to now in this 2018, there's a 21,000 crore flow out. So that I think augurs doesn't augur very well. Plus our own concerns, in India will possibly still lead to further reluctance to invest in India, as it were.
Let's talk about a sector where as of now it clearly looks like that there is no light at the end of the tunnel. It is more like a bottomless pit, and you've guessed it right, the Indian banking sector, and especially PSU banks. You have a deep understanding of what's going there. What is your sense? I mean, do you think it's going to get much more darker and the dawn is still a distance away?
Well, in the public sector banks, there has been a lot of pain, and some pain will continue going forward. I know the chairman of State Bank has said that the worst is behind us, but I am not so confident and sanguine as he is, because the environment is still not fully ready for bottoming out of all those problems. So for instance, the Insolvency and Bankruptcy Code, one of the most important strategic and structural measures that this government has introduced, it is still in a state of effective implementation. So it is going to take time, about a year to 2 years to settle down. And till that time, resolution will be not as rapid and quick as one would like. Also, maximizing returns from those bad debts, from those toxic loans, is a must. Now, the whole process where the creditors committee sits in judgment on a resolution professional. The resolution professional is a very weak link, as you know, in the whole system. Now, you see legal challenges have delayed resolutions, but also the creditors committee does not feel individually that they are responsible for the debt problems. So they feel that they can write off and get on with it, and in the process a lot more is written off than perhaps is warranted. And that requires then capital into the banks. Now, how do you get capital in the banks? If, as has been done till now, if the government just gives in money into the banks are prone to writing off more, or not collecting, or not being as efficient in their credit appraisals and recovery. So I think there has to be some pain on the banks for not performing. And the US model was a better model, where Citicorp was bailed out, where 10% of the losses of the toxic loans for which the government was standing guarantee for 90% of the amounts, 10% of the loans were to be, 10% of the losses were to be borne by Citibank. So there was a powerful incentive for Citibank to maximize its recovery and therefore minimize the drawdown of capital from the government. I think something like that is necessary, so that there is some incentive for the banks, public sector banks, to recover as much. And of course, going forward, I think government is trying a lot to improve the management, governance processes, CEOs, etc. And I think those will come, but the pain is not over. I think there's still going to be some more pain.
Okay. Yesterday when I was doing my Facebook Live, Pradip, on Facebook, a lot of viewers and followers asked me whether 10,900, roughly 11,000 would be the top for the market. Very difficult to break past that. Do you believe that the upside is capped?
Well, there are no triggers for upside. The economy is doing very well. There's demand, consumer consumables, consumer durables, two-wheelers, four-wheelers, tractors, even capital goods. There is noticeable demand, and that's because of 2 years of suppressed demand. GST and the demonetization had their own concerns, but we had good monsoons, and so that pent-up demand is reflected just now. But beyond this, there is no real trigger for us to do well. So we will grow from 7%, maybe 7.5% this year, but it's not going to be 9% or 10% because it's not possible. Also, we do have the clouds of oil prices being high, dollar appreciating and money flowing into the United States. And also, of course, our own elections looming forward. Now, if, for instance, there's, no investor can discount this, that if the present government, which of course the investors like, if the present government does not get the same kind of mandate that it had in the past, will it be able to continue with the structural reforms and other welfare measures, as well as implementation of policies that they've already announced? Will it be as effective in doing so? So that concern will keep a cap on markets. Individual stocks on the basis of outperformance beyond expectation will surprise markets positively. But overall, the market, there is no great trigger for the market to really blossom upwards.
I think that despite the market not being able to see a major upside from here, consumer stocks will continue to outperform?
Well, consumer goods are doing very well. You see the demand growth, volume growth in almost every company, not just multinationals, Indian companies, companies that have strong positions, companies that have continually come out with new products. They are seeing excellent demand. I think that augurs very well for the economy as a whole. It leads to job creation, it leads to investment, and so I think that there is no likelihood of stopping. There's no likelihood of turnaround downwards in the consumer demand. It will continue to grow.
What should one expect in terms of returns from Titan, HUL, Page Industries? 3 years ago, both you and me, when we interacted on the same forum, we agreed to one thing, that these are great businesses but not great stocks. And frankly, after that, for those who bought a Titan or a Page or a Jubilant, they've actually made money. So, guys who are betting on expensive businesses available at ridiculous prices are making more money rather than true blue value investors.
Well, this is of course always the case, that investors prefer the comfort of proven businesses which have proven management. Look, take a stock like Hindustan Unilever, how well managed it is, how good its product ranges are. It's alive to opportunities, it never misses them, and so people have the confidence that it will continue to do so in the future. So even if they overpay, they feel that there will be continuing growth in the company, and therefore valuations, as you point out, are much better in other scripts, perhaps commodity scripts or perhaps industrial scripts, but not in these consumer stocks. But the consumer demand continues. There's no cyclical decline in demand, and so I think people are betting on these good managements and good companies to sustain profits.
Okay. The rupee is at multi-month lows. Do you think it's time to be contrarian in IT and pharma?
So I think the IT pharma will benefit from not just the currency depreciation, but because of their being able to service a felt need. So for instance, Indian IT companies are adapting to the changed demands which have been brought about by the great disruptive forces of digitization, where it's mobility, analytics, and so on. And they are offering proprietary IP-led solutions along with their services to give complete total solutions to their customers. So, and we are doing it at a very competitive cost. Not only are we giving them at competitive cost, we are, as I said, giving complete solutions. So we will continue to see demand in the IT industry, especially the leading companies. I think they should do very well, those who have seized this opportunity. So also the pharma. At the end of the day, the United States and President Trump has announced that he has to bring down these costs. How does he bring down those costs? One of the strategies that he's talking of is getting pharmaceutical products from outside the country, because there the cost structure is better, and especially generics, where even today generics are prescribed in larger numbers than patented drugs. So I think the pharma sector is going to do well. Yes, there has been a consolidation on the buying side in the pharma industry in the United States, and therefore that has affected the margins of many of our pharmaceutical exporters to the United States. But as new products come off patent, as biosimilars and other more complex molecules come off patent or are available for addressing in the US market, I think the Indian pharmaceutical companies will do very well. They are seized of these opportunities.
Okay, Pradip, we'll leave it at that. Thanks very much for joining us and giving us your perspective on the markets. Really appreciate your views and your ideas.
Pleasure.